days, we have had the privilege of access to the international faculty who have been contributing to a lot in terms of thought leadership to emerging issues, current issues in international taxation. And so the organizers thought of inviting two of the leading faculties for benefit of our membership, and we will have this very interesting session today, this evening. Friends, in 2005, Thomas Friedman wrote the book World is Flat, and to be honest, the world is getting flatter. With the Internet of Things coming to the fore, I think the speed at which the digitization and globalization, the intertwined trends are taking place, it's just amazing. I think in few years we will not even realize what it used to be in terms of brick and mortar and old economy. In this situation, the traditional structures that have evolved in respect of the international taxation and cross-border trade of goods and services may start losing or have already started losing relevance. The amount of work, also this has combined with a lot of upheaval in terms of global economy. And when there are economic challenges that a country faces, obviously they would like to ensure that their revenue is protected, and they would take up measures to protect their revenue. So in that sense, a lot of material that has emerged over last year and a half. G20 has pushed, OECD has done a lot of work on base erosion. There are other emerging subjects. So this is the background with which this program has been organized. I'm sure all of us know what Bombay Chartered Accountant is, but for our esteemed guest, let me just say that Bombay Chartered Accountant Society was set up on 6th July 1949, just 6 days after the institute was set up under the Act of Parliament on 1st July 1949. In 1987, our stalwarts, our leaders, thought leaders at Bombay Chartered Accountant Society thought it fit. They saw what was to come even nearly 20 years before Thomas Friedman wrote that book. In terms of international, emerging importance of international taxation, where at that point of time very few people had heard about international taxation. So Dilip Bhai Thakkar, Rashmin Bhai, all of them set this movement in, and as you all know, or as we all know, this movement has taken gigantic shape. A lot of professionals in the field of international taxation in Mumbai today would certainly owe gratitude to the movement pioneered by these thought leaders. And today we have been organizing the annual conference for last 18 years. We have long-term study courses on transfer pricing and double tax avoidance agreements, besides host of study circles and other workshops that we organize. With that brief introduction, I now I invite Paras to say a few words about Chamber. Thank you.
President of the BCS, Nitin Singhalla, Rashmin Bhai, the speakers of the day, Professor Michael Land, and Professor Kees van Rijn, Mayur Bhai, my friends and seniors in the profession. I welcome you to this program organized by the Chamber and BCS. As Nitin Bhai told already, that taking the benefit of the IFA conference in Mumbai, we took the benefit of these two learned speakers and invited them for the benefit of all of us. The Chamber is one of the oldest organizations in India, established in 1926. And the uniqueness of the Chamber is that we have the members, not only chartered accountants, lawyers, corporates are also there, and the tax practitioners. The activities of the Chamber are no doubt we organize various events. It may be study circle, full day event, overnight residential courses. We also publish monthly journal which is known as Chamber of Tax Chambers Journal, which is the one of the widely acknowledged journal, and the benefit of this journal is that we have the theme-based journal, whole topic which is analyzed in the journal, and the person whoever is there, once he takes that topic, you get the basic material as well as some advanced material on that topic. Whole things is available on that, and the people have widely accepted this journal. With these few words, may I request Rashmin to take the proceedings further. Thank you.
Friends, good evening. Both Bombay Chartered Accountants Society and Chamber of Tax Consultants organize excellent conferences, but IFA is a global leader, and both the organizations thought it fit that our members who probably could not participate in IFA Congress should also have some benefit of the global leaders on international taxation. Hence, we requested Professor Michael Lang and Professor Kees Raad, and both of them have very kindly agreed to share their thoughts with you. I would prefer that they get the maximum time, so I am not going to speak anything except if at the end there is some time permitting. I request all of you to please put off your mobile phones in case you are not put off. And I request Nitin Singala to please give a memento to Professor Michael Lang. I request Paras to give a memento to Professor Kees van Raad. Friends, first Professor Michael Lang will address us. Then we will have some time for question answers. But if you have any query, you have been given in the folder some blank papers. Please put down your query and hand over the queries to me. And then time permitting, Professor will respond to our queries. Yeah. May I request you?
Dear Presidents, dear ladies and gentlemen, dear colleagues, dear friends, first of all, thank you very much for the kind words of introduction, and thank you very much for inviting me to this event. I'm very happy to be here this afternoon. I'm also very happy to be in India and in Mumbai, the home country of very talented, very gifted students I had over the years, and I just had the pleasure to see one of my students again here in this room just a few minutes ago. I really would like to congratulate you for the Congress your country and your IFA branch has hosted. The Congress is almost over, so we are celebrating the Gala dinner tonight. Then this is the official end of the Congress, but for all of those who couldn't make it, I understand somebody has to work, not everybody can attend conferences and congresses, but those of you who couldn't attend, I can assure you it was a very successful Congress, and I think you all can be very proud of having organized such a wonderful conference in your country, in your hometown. I think all the participants who came from all over the world have been very much impressed, including myself. So I will take a lot of very nice memories from my stay here in Mumbai. And it's very nice of you inviting me for this afternoon to share some thoughts with you. And yeah, the organizers were kind enough to allow me to choose the topic for this afternoon. So therefore, I decided, since BEPS is the theme of the year or of the decade, of the century, who knows, probably not of the century, but maybe of the year at least, and maybe also of the decade. So therefore, I decided to talk a bit about BEPS. Of course, BEPS is a topic you could talk probably for hours, because there are so many different initiatives under the BEPS heading. Not everything is new which came out under the BEPS flag, so therefore one has to be careful. I think a lot of old ideas have been rewrapped by the OECD and by the G20 to a certain extent. Some ideas which didn't fly 5 years ago, 10 years ago, now those ideas came back, and some governments and the OECD is trying to put those ideas back on the agenda. But of course there are also some ideas which are quite new. And there seems to be now a lot of momentum, and I think everybody is expecting, and in my view correctly expecting, that this is not just a debate which is going on, but there is something which follows. So probably there will be changes, in particular also in the tax treaty area. Also probably not everything which is now being discussed will be implemented, but I think a lot of those ideas will be implemented at the end of the day. So therefore I think to be prepared for this new world, I think it's also important to deal with those issues already now, and to at least to put the questions on the table. And that's what I try to do in the next 40 minutes or so. As I've said, even the tax treaty issues of BEPS, on which I'd like to focus, is a huge topic. It's also a research project of our institute in Vienna. We will have a big conference at the end of June next year, where we deal with each provision of this project, each suggestion for changing the tax treaty of BEPS. So if you want to hear some answers then, and hopefully we'll have some answers by the end of June, this is a good excuse to travel to Vienna and to join us for this conference at the end of June. Today I hope your expectations are not too high, so I want to raise some of the questions which came into my mind when I studied all the drafts which came out. And this, I think probably most of you know, so many draft papers had been published by the OECD in recent weeks and months that it almost requires full time just trying to read and a bit understanding what's now on the table. So it's almost impossible to follow everything which came out. So, I don't know how to... okay, now it works, yeah, thank you. Yeah, maybe to start, I think with a quite important statement. Of course, the OECD has not been lazy in previous years. There had always been a lot of activities. But I think the focus of the OECD activities had been different ones. First of all, there was not so much support as there seems to be now by leading politicians. So therefore, as I've said before, there is a high probability that some things really will change now. But the focus of the OECD in previous years was not so much on the OECD Model Convention as such, when they developed the provisions further, but they put more focus on the OECD commentaries. And I think it's interesting to acknowledge that, because I think that's not a coincidence that the focus in the past was not so much on the OECD Model Convention as such, because the OECD, of course, realized that whenever they change the OECD Model Convention, then it takes approximately 30 years until the provisions they suggest, the new provisions, are implemented in the majority or in all bilateral tax treaties which are around. So therefore they thought that the better alternative is not to change the OECD Model Convention, but the OECD commentaries instead. And they hoped that courts will apply the OECD commentaries on already existing tax treaties. However, this didn't work out, at least not in the way the OECD has thought and hoped, because I think for obvious reason, just to mention a few keywords, separation of powers, rule of law, many courts were very cautious to apply the OECD commentaries, changed OECD commentaries on already existing tax treaties, because tax treaties in most countries need the approval of the legislature, whereas the OECD commentaries are just changed by the OECD and therefore by government representatives at the end of the day. So therefore, that's why I mentioned separation of powers and rule of law. So since the OECD has realized changing the OECD commentaries is not really enough and leads to a lot of confusion at the end of the day, because in some countries there are courts which follow the most recent version of the OECD commentaries. In other countries they would never follow the most recent versions of the OECD commentaries. So they've changed their policy, and now the focus is very much changing the OECD Model Convention as such. Of course, they are aware that changes of the OECD Model Convention, as I've mentioned a few minutes ago, usually need 20-30 years to be implemented, and therefore the OECD is also working on an instrument to multilateralize those changes. So the idea is to bring together most countries who are interested and work on a multilateral instrument which could change the OECD Model Convention or the bilateral tax treaties much quicker at the end of the day. However, nobody knows if this will work at the end of the day. There is also a discussion draft out, but I think the ideas are not really very concrete how that should work. So we will know. But as I've said before, the focus right now is on changing the OECD Model Convention. And I will mention a few provisions. Starting point of a large part of the debate, of the whole PEPS debate, was and is the digital economy, because we all know it's for the first time that those tax issues are mentioned at the front pages of the newspapers, and everybody is talking about some big enterprises, part of the digital economy, and the schemes they use, and to a certain extent they benefit also from some tax treaty provisions. And one of these tax treaty provisions, which at least at the beginning was very much in the focus, was Article 5, Paragraph 4 of the OECD Model Convention, which is the exception for permanent establishments for auxiliary and preparatory permanent establishments. Because just think about warehouses and so on, which are usually exempt under these provisions, and some of these companies benefit a lot that these establishments are not considered to be permanent establishments, and therefore don't lead to taxation in the source country. So therefore, one of the ideas which is on the table is to change Article 5, Paragraph 4. However, the proposals in that respect are not very concrete. There are different ideas on the table. One idea is to delete the whole paragraph. This is the most extreme, the most radical proposal which is on the table, so therefore that we have as permanent establishments fixed base in generals, but without this type of exception we have in Article 5, Paragraph 4. Another idea is to delete some subparagraphs of Article 5, Paragraph 4, because just to recall, to remind you how the paragraph is drafted, some different types of exceptions are expressly listed, and then there is a kind of general clause saying, and all other kinds of auxiliary and preparatory work. So therefore, the one idea is to delete those exceptions and therefore make sure that the rule is only applicable on preparatory work, or the exception is only applicable on preparatory and auxiliary work. Or one idea is also to delete the term delivery, which is also in the focus of those companies which are part of the digital economy. But I don't spend too much time on that provision because the OECD has not spent too much efforts right now. They've not decided in which direction they would go at the end of the day. Other interesting provisions we'll find in the documents according to Action 2 of the PEPS initiative. Action 2 deals with hybrid mismatch arrangements. And we have a lot of suggestions which concern domestic law. So the idea is also to a certain extent harmonize at least some parts of domestic law. But there are also provisions which concern the tax treaty. And one of those provisions is Article 1, Paragraph 2. And this provision has a lot to do with the ideas of the OECD Partnership Report, which in my view is one of the most fascinating topics of international tax and of tax treaties. The Partnership Report came out in 1999, and for me at least, and I think for many others as well, for the first time made clear how complex the issue of the treatment of partnerships is. What kind of conflicts could arise? And we have in general two different types of conflicts which are touched in the, which are dealt with in the partnership reports. On the one hand, kind of allocation conflicts, because partnerships are treated transparent in some entities, opaque in other entities, and therefore we have conflicts because sometimes the partnership is the taxpayer, in other jurisdictions is the partners, the taxpayers, and therefore a lot of treaty conflicts are the result, are the consequence of this different treatment. And the approach the OECD has taken already in the partnership report in order to solve those conflicts of allocation of income, that whenever income is allocated to different entities in the two countries, then the treatment in the country of the beneficiary, the residence country of the beneficiary, should prevail. That was the basic approach under the OECD partnership report. In its there had a lot of people around who have been very skeptical whether you can implement these ideas under the existing OECD Model Convention, because it's an interesting theory, maybe not really consistent in itself, yeah, but that's a different story. But it's a theory which did not go hand in hand with changes of the OECD Model Convention. So therefore there had been a lot of scholars around and other experts who suggested that the tax treaty should change, and you need a legal basis to apply those ideas. And what we seem to get now, 15 years later, after the partnership report came out, the idea is to add another paragraph to Article 1 of the OECD Model Convention and to create a legal basis for the ideas enshrined in the OECD Partnership Report in respect of those allocation conflicts. So therefore, whenever income is derived by or through an entity or an arrangement that is treated as wholly or partly fiscally transparent under the tax law of either contracting state, shall be considered to be the income of a resident of a contracting state, but only to the extent that the income is treated for purposes of taxation by that state as the income of a resident of that state. So therefore, in other words, the idea is that the treatment in the state of the beneficiary should prevail in such a conflict. This rule is not really completely new, because it had been taken basically from the US Model Convention. The US had in their Model Convention already for a long time such a very similar, not identical provision, Article 1, Paragraph 6 of the US Model Convention, and this rule is more or less copied and pasted from the US Model Convention. However, it will be quite interesting, and these are just some of the questions I would like to raise, because of course the advantage of using something which had already been in place, at least in the US Model Convention, is that you get some guidance. So we can look into US literature, we can look into the US administrative practice in US rulings in order to understand better Article 1, Paragraph 2, this new provision. On the other hand, I think we should be careful because if we put one provision in a different context, in a different setting, then it might also mean something different. Yeah? And what we see already from the draft, which is there, that it does not really completely fit. Yeah? It fits for the US Model Convention because the US Model Convention is dealing with taxation on income, and taxation on capital. Property taxation is for domestic reasons in the US, not really an issue of the US Model Convention. Yeah? Whereas the OECD Model Convention is applicable on taxes on income and on capital. However, this Article 1, Paragraph 2 does not touch the term does not use the term capital, it just uses the term income. Which I think leads to some questions at the end of the day why this is really the case. What is also interesting that there are some deviations from the US Model Convention. For example, from the US Model Convention. The US Model Convention uses the term fiscally transparent. This is copied, but here in this provision we have also the term wholly or partly fiscally transparent. Yeah, and therefore we will find out. I think the idea of the OECD is not that this different wording indicates a different meaning. However, once you have different wording, and at the end of the day, in many countries, judges will have to decide on this issue. When they see different wording, they might draw their own conclusions from that. So we will find out. It's also interesting that for the first time in the OECD Model Convention, the term fiscally transparent becomes a legal term. Yeah, because of course we are, in our colloquial tax language, we are talking about transparent entities, so we have been using this term quite often. But it makes a difference once this term becomes a legal term, because then it has to be interpreted again by all the taxpayers who apply the treaty, and finally by judges. And what I have, for example, learned from a general report of IFA many years ago on partnerships, Jean-Pierre Legal was the general reporter, and if you read that report, then you really realize that the world is not black and white. It's not the case that there are fiscally transparent partnerships on the one hand and opaque partnerships or entities on the other hand. There is a lot, as always or very often in life, there is a lot of gray area in between. And I think what will become a very exciting issue now in the future is to define what is a fiscally transparent, because we will find out in the future there are some strange animals around where it is quite difficult to tell whether they are fiscally transparent or whether they are taxable entities. So these are just some questions I would like to put here on the agenda, on the table. Maybe we have time to discuss them afterwards, or maybe you have already the answers to these questions. I think what's also quite interesting in respect of that provision, and that's also a general remark, because this is very relevant in my view also in respect of many of the other changes which have been proposed, that what will that mean for all the existing tax treaties? Yeah? Because, of course, the OECD, and we have discussed that at the IFA Congress, if you ask people like Jacques Isuues and other people working at the OECD, they, of course, will tell you, well, the intention is not to change anything. They are convinced that under the OECD partnership report, they've already solved the issue, and this is just a mere clarification. Yeah? However, again, it's not the OECD which has the last word, it's the judges in many countries. And we have some experience that, of course, if a judge looks at the provision, if a judge compares a different tax treaty provision, then a judge might, at the end of the day, conclude and say, well, in Treaty AB we have this provision, so therefore the approach X is applicable. And since we don't have the same provision in another treaty, the legal consequence might be different. Why? Yeah? Of course, I'm not convinced if this is the right approach, because I think Klaus Vogel and many others have correctly pointed out that you have to look at each treaty separately if you interpret it, so therefore each treaty has its own context. However, you never know what judges do at the end of the day, and some judges, I'm very much convinced, will look at these treaty provisions like that, and therefore this might also be the end, such a provision, of the application of the partnership report in those cases where the partnership report had been applied so far. in this BEPS action number 6 in the draft papers, which